customers are continuing to invest in digital transformation. When did you really start to see this, or was it just throughout the quarter? And as the quarter progressed, how did it change?
Yeah, sure. As I said yesterday in my prepared remark, we saw throughout Q3 an uneven market with a little bit softer demand. And I commented on this at the end of Q2. We saw already that in the last month of our fiscal year Q2, and that continue and carry on through the Q3 quarter. That said, customers continue to affirm the need to accelerate the digital transformation and take advantage of the explosion of data we see around us, which ultimately is the core aspect of how they derive to the business outcome. So obviously, the uncertainty kind of create a little bit of pause. It takes a little bit longer for them to make decisions, particularly larger deals. And so that's what we saw in elongated sales cycles.
So do you, it looks from margins like you're not doing discounting, trying to kind of nudge that process along. Is it just a matter of the process taking a little bit longer because of that uncertainty, or is there a certain tactic that you're tending to use in certain regions to move things along?
No, John, listen, I think we executed with incredible discipline, both on the cost side and on the pricing side. We actually have done a remarkable job in the last 7 quarters to continue to make our cost structure more competitive and to streamline everything across the company. As you recall, when I became the CEO, I established 3 key priorities for ourselves. And one of them was at the core to start with our HPE Next program, which was to re-architect the company from the ground up. That included a cost benefit, but at the same time, a portfolio shift. And we are seeing the benefit of that portfolio shift today in our margin profile. And so that gives us the ability to expand margins significantly. And I believe we deliver record levels of year-to-date free cash flow, which give us the confidence to raise the guidance again for 7 consecutive quarters.
Huawei is a big player in the enterprise hardware market, and it's been quite a while now that we've seen the U.S. putting pressure on companies, not allowing them to do certain types of business with Huawei. What has the impact been now that this has sort of been normalized throughout the enterprise hardware ecosystem? What's the impact been? What do you expect it to be going forward?
Well, I think it's an opportunity for us. Listen, we have a very complete portfolio from the edge to the cloud, and that digital transformation starts with the connectivity, secure connectivity. So we have a phenomenal platform called Aruba that provides a mobile-first, cloud-first approach. At the same time, we are here to serve our customers in the countries where they participate. And we have a very diverse global supply chain that allows us to navigate through these challenges. So I think I take this as an opportunity for us to serve our customers better and continue to provide the value they're looking for. And obviously, we need to navigate through this uncertainty, whether it's Huawei or others. At the end, we are really focused on our business and our customers.
And your CFO on the earnings call yesterday said that fiscal year 2019 would be one where you do focus more on EPS and free cash flow, less so on growth, but that would come in subsequent quarters. Can you give us a sense of timing in which you would focus more on growth and how the macro backdrop could impact those plans?
Yeah, sure. As our CFO Tarek said, we focus this year in stabilizing our business and continue to shift our portfolio to higher value, higher margin, and deliver everything we can as a service to our customers. And you see the results of that in our portfolio mix in the key strategic growth areas like high-performance compute, which is the backbone for how analytics and AI will be run going forward. And we are extremely excited about the completion almost of the acquisition of Craig, which will be completed by the end of Q4. At the same time, in the core business, we have to continue to deliver what I call workload optimized, hybrid cloud solutions delivered as a service. So we are on that journey. We make tremendous progress, and we have a truly differentiated offer called HPE GreenLake, which is to deliver everything as a service. At the same time, because we have created more room for ourselves to invest in the business, we have invested in R&D and FSC, field selling cost, which will allow us to position ourselves for growth in 2020 to 2022. So as we get to the security analyst meeting in October there in New York, We're going to share our plans, where we're going to grow and how we're going to return to what I call company growth in total. But we are very, very confident in the 3 years plan that we have put together for the period of 2020 to 2022.
Yeah, you've emphasized that 3-year plan. So some analysts, even the ones who are relatively bullish on HPE, are wondering about 2020 and how much growth they can expect there based on what they saw as sales a little bit light in this quarter. What would you say to those who are concerned about 2020 growth, even outside of that 3-year growth target that you have?
Well, we have taken deliberate actions to vacate certain areas of the portfolio we call the commodity business, which we used to sell to the big cloud providers, and we have been winding that down for the last 2.5 years. At the peak, that business used to represent almost 20% of our compute revenue. Today is 2% of the revenue, and so if you do the math, that was several billions of dollars. So we have transitioned that out almost. And at the same time, we continue to grow the other areas of the portfolio. As we make the crossovers, I am very, very confident that in the 2020 and beyond, we're going to see a consistent execution on growth. But in the areas where we actually can deliver better margins and better recurring revenues, particularly with our HP Point Next services and HP GreenLake. That's our plan. That's our focus. We are on that journey. We are making progress. And if you think about some of those strategic areas, our storage business this year is going to show growth overall. Our Aruba portfolio, excluding the China part, is going to show growth. Our Aruba service is growing 60%. Our HP GreenLake is on double digits growth. So we are on the right path in the areas we want to invest. And I think in the next 3 years, you will see the result of that strong execution.